And today really is a milestone in my career, and I have to say it's a proud moment because how many angel investors are there out there in Sacramento who have their very own portfolio manager? We have arrived, my friends. Today, I want to bring to you my portfolio manager, my buddy, DeWeerdt. He is basically here to help take on what we've began here at HaneyBiz. How you doing, Ian?
I'm doing well, Mark. Thank you. I appreciate that.
You bet.
Excited to be here.
You bet. I want to have our audience get to know you a little bit. I know you have this extensive background in hedge fund management, in venture capital. So maybe give us a little bit of your background, and then what attracted you to HaneyBiz.
Yeah, sure. So I've always gravitated towards capital management. I didn't necessarily study it in school, but as I got out into the real world, trying to make a living, I took some entrepreneurial journeys, and I found my billable hours when I was in my young 20s were always low because I was reading the financial page. I was reading about stocks.
Okay. Instead of billing,
instead of actually getting
Ian.
the work done. And so I had a couple of clients who said, "I think you're in the wrong business. Like, go chase your passion." And combined with almost 20 years of lucky breaks, brings me here. So it's been a great journey. I started. I got my first break doing trade settlements at an off Wall Street services firm. Parlayed that into an accounting role, doing hedge fund accounting. So really working my way from the back office to the front office. Started deep in the back office, and I then caught my biggest break early in my career. There was a hedge fund in San Francisco. They were expanding rapidly, and they needed help on the trading desk. And my background had a little bit of accounting, a little bit of trade support management. It got me in the door at a hedge fund that over the 8 years I was there went to $5 billion. I had a variety of roles there, so I got to see a lot of different angles of that game, from trading to risk management to equity analysis. And then I took a right turn, took a pivot in 2014 when a friend of mine was interested in a startup firm. They were looking for capital, and he said that he was going to launch a venture capital fund to get them funded, and he wanted to know if I thought the deal made any sense. So I looked at the company, I looked at his plan to launch the venture capital fund. And I got really excited about both. So I jumped into both. I became a director at our little startup venture capital fund. And I joined the startup as a CFO. And I spent about 5 or 6 years in that role. And then I heard your pitch, local Sacramento investing. And I got to know the people here over the course of the last 2 years, and just kind of got pulled into the gravity.
It's gravity. It's amazing. So I think our team tends to do that. We tend to sort of there's a magnetic force that happens here in our office here in Rockland that I think really it begins with our people, and so I'm lucky. I feel lucky to have you. I feel like I've caught a break with you coming on board with your experience. You've helped us already with a number of projects over the last 12 months or so. I mean, some of the things that we've done is helped a restaurant supply company acquire somebody and then recently have a successful exit to a strategic. We've worked on numerous angel investing type projects where you've kind of helped us tighten up our paperwork and help. Really, to me, it's about helping the entrepreneur. And I think I felt like your first day, as we were sort of going, what do we both like about this opportunity? When you said, "Hey, I really like helping entrepreneurs," it sort of stuck with me because that's kind of what it is for me too. I get this, I guess, super rewarding feeling when an entrepreneur succeeds in my world, and if I can be a small part of that, there's just something kind of special. And I think you have some of that too.
Yeah, absolutely. And I think it's about a lot of what we're doing here is filling the gaps for entrepreneurs. You want to help them succeed, and as they go on that journey, they're doing a lot of things they've never done before. So yeah, I was excited. The first couple of things we worked on here, it was very obvious there were entrepreneurs looking for capital, and that's a really daunting task. And it involves a lot of boring paperwork. It involves a lot of time on the phone, a lot of time storytelling, a lot of things that are very far removed from the core product and the core principles that got that entrepreneur involved in the first place. So as we started approaching the work here, it was really obvious to me we were adding value to those entrepreneurs, not just the capital, which is a commodity, but really helping them with every step of that process.
Yeah. And you think about the work we've done here, right? We're backing the hometown entrepreneur with access to capital, expertise, and this community, which includes a podcast and our events and so on. And I think there's parts of that we are very good at. We found our way into investing into, I think, 37 companies now. I think we've already invested into a couple since you started just a week or two ago.
Moving fast.
Yeah, so and there's a pipeline going, but I feel like our accounting group has been very helpful for me in helping sort out the financials. But you coming in with your financial expertise really is so additive because you have this background in deal structure and really in coaching these entrepreneurs that are focused on their product. You can help them figure out what's the best way to go get equity financing, or maybe equity financing is not what they need. So you kind of have this sort of strategic mind for that kind of stuff.
Yeah, I hope it's helpful. Thank you. One of the things I like about the deal flow pipeline that we look at is that it's so diverse. Startups can have a broad range of the amount of innovation they're bringing to the table. A corner store, grocery store, for example, right? Not a lot of innovation there. Still has a need for startup capital. To the other end of the spectrum, right? It could be the next great tech company. Also needs capital to start up. But that journey from the idea to operation, their strategy to raise capital is going to be very different. And I think one of the most daunting things for the entrepreneur when they're on day one, how am I going to raise capital? What's the right way to do this? How do I structure the company? And I think there's a lot of questions that need to be answered there, right? How much more capital will you need in the future? How can investors bring strategic value to you? And these are questions that until you've done it, they're really hard to answer. It's hard to read a book and have a conversation. So, I like what we do here in bringing experience and different views from peers and mentors, which allows the entrepreneur to get that head start. So you start your capital raising journey with a leg up, and hopefully allows the entrepreneur to get back to focusing on their product and their business rather than the capital raise.
You bet. Well, we have something here, Hanging with Haney, and I don't think you've sat in on a Hanging with Haney yet, but people come in. We have one tonight. We come in these small groups, and people. It's Q&A session with Mark Haney, and I'd say half the people that come through are wanting to understand more about how to raise money. So we try to demystify that at some stage. And I try to break up these questions or these entrepreneurs really into two categories. And I'm looking for some help on this, but I'm thinking there are a certain group of entrepreneurs that are really geared toward, like you said, maybe it's a tech company, really going toward, maybe they get an angel investment round, and then they're working toward venture capital. They're working toward institutional financing that might come from venture capitalists, and they may go Series A, Series B, C, D, E, F, whatever. Maybe go public or get acquired along the way. And there's sort of this path that's been sort of written, and a lot of people don't really have a good understanding of all of that. And then there's these other people that I haven't invested into a corner grocery store yet, but maybe a restaurant. It's a little less likely to go on this rocket ship ride. It might be opening up one per year, and it's really not set for the traditional venture capitalist, but yet at HaneyBiz here, we like to invest into companies like that might throw off cash flow and really build still a very valuable opportunity, but it's just a little bit of a slower growth model.
Right.
So, I mean, from a I'm interested into, so you're seeing a wide variety instead of, in your old world as a VC, you're looking at, rocket ships or looking for the next rocket ship. And here it's kind of Mark Haney's special selection of rock star entrepreneurs that he's looking for, but they got to be in Sacramento. And that's the one, that's one of our prerequisites.
Right. Well, I think, the rocket ship context doesn't, you don't have to be a rocket ship to be a successful business. All you have to do is find a market need, find a gap in the market and fill it. The rocket ship concept is more of a function of how much innovation are you bringing to the table. But a serious amount of innovation isn't necessarily necessary to build a successful business. So I think it's great that we're addressing the capital needs across the spectrum, and not just the capital needs. I think, I don't want to focus too much on that. All of the needs that entrepreneurs have that are not core to their product. I think we've helped a lot of people with human resources, accounting, sort of getting them in touch with the right legal counsel for their specific need. I think all those are great resources for, regardless of how much innovation you have in your company. Entrepreneurs need support across all those verticals.
Yeah. One thing that strikes me talking to so many entrepreneurs is that many of them are trying to sort of go it alone, where they're the entrepreneur and then they bring in their first set of employees at maybe minimum wage or very low pay, and they really don't surround themselves with anybody that would be considered a peer at the beginning. So they bring in lower level people as their first employees, and so they really don't have that sounding board of a true peer or somebody who knows more about business than what they do. And so in many ways they grow their business through hard work and all these other innovation and things, but they do feel alone at the end of the day. And so I mean, you've probably seen that.
Yeah, I think the journey can be it can be very lonely because there's always something to do, right? Like the next problem has always shown up, and I think if you don't take a step back and say, okay, what's the big picture? How do I solve these problems without just grinding myself down? You can lose sight of the fact that I think most of the problems that entrepreneurs face, again, the ones that aren't core to their product, are things that other people have solved already. So I think it's just so key for young companies to network with their peers, because you're having a problem with payroll or filing this or filing that, getting this insurance policy set up. It's been done a million times. And so it's really important not to burn too much energy on these problems that somebody else has already figured out.
Yeah. One of the things I like to do is invest into the CEO, the rock star entrepreneur, and his or her leadership team. It's key to me to have a team versus just the person that's going to go it alone. But when you have looked at this, and what you're helping me to sort of develop my viewpoint on our investment thesis, I mean, what are you looking for when you look at a team? What do you look for? Is there like certain attributes that stand out to you that say, you know what, Mark, we gotta go for this one?
Yeah, I think an important thing to look for in a founding team. And I know there's some tension kind of embedded in what I'm about to say, but you have to look for extremely deep knowledge in the team to face the problem that's ahead of them, to face that build that's ahead of them. So, on the one hand, you want them sort of intellectually prepared to scale this mountain. And then this sort of feels like a paradox, but you also want them to be very transparent in admitting they don't know what they don't know. Sorry, that was a mouthful.
A certain authenticity is critical.
Right, so you want the deep knowledge, but then you want the founding team also to say, we're not experts in X, Y, and Z.
Yeah.
And that's where we're going to get tripped up. So that's where we need help.
And I guess, we could call that maybe even humility. And when so we're sitting here in a area where we do our podcast, but I've had several people pitch their ideas to me here inside Mark Tank in the Marquee Media Studios.
I've sat on this couch
right?
and
Oh, that's
pitched
right.
it.
You've been across from me at
Yeah,
one
years
point.
ago.
So you think about that, and I agree when somebody is not listening. And I tend to do that sometimes. I don't. You are one thing about you is you will call me out on that, so which I do appreciate. But I want somebody who I can be in the room with who is a good listener. And to me that shows a little bit of coachability, a little bit of open-mindedness, because every business that I've ever started, the business plan ultimately ends up changing, and if you're not open-minded enough to listen to input from the person that you're pitching to, well, I mean, who are you going to be open-minded to?
Are you going to listen to the market, right? Are you going to listen to all the other indicators that come up along the way that tell you maybe you're moving in the wrong direction? I think it's a great, it's very instructive in that conversation to know, is the founder listening to the feedback? Because as you're building a company, everything is iterative. It's one step forward at a time, but you got to take in the feedback from the marketplace, from your vendors, from your employees, right? And build that team, and you have to digest all that information and put it back out. And if you find in the pitch, in that first 10 minutes, you find that the person isn't listening to the conversation, it's a pretty easy pass when it comes time to talk about terms on the investment.
You and I were talking a little bit before we came on the air about impact investing, and you come from an area. I have this plastic bottle here I'm drinking out of, and you're refusing to drink out of a plastic bottle on camera. You're an environmentally aware person, and we were kind of just bringing up the term impact investing, and I asked you, do you think what we are doing here at HaneyBiz is impact investing? And so I wanted to have that debate with, since we just started this combo, we just started this relationship to a certain at this level. Let's see where you and I stand on this topic.
Sure. So, I mean, just to start off, I try to avoid plastic bottles off camera as well. But yeah, it's a great question. So I think, so I'm coming out of the impact investing community. The fund, when it was active, really focused on biomaterials, biochemicals, plastic pollution, huge issue, and really looking at technology to solve the plastic problem. Also spent a lot of time in sustainable agriculture and sustainable food systems.
Was that something that mattered to you more than the average person, and so you wanted to be in that space, or did you develop that once you were in there, going, "Oh yeah, this is a big problem. Heck, I better get passionate about it."
No, it's a great question. Honestly, I was passively interested in environmental issues, so I wasn't banging the drum.
Okay, you're not an environmentalist.
No,
wacko.
I got into it. I got into it chasing dollars, and I have to admit, I was there for the investment. I thought it was a good business, and I became indoctrinated as I realized just how bad the situation is in the environment. So yeah, when we would look at deals, we were looking at a pipeline of deals where we were only interested if the environmental impact was right there in the surface. So really embedded in the DNA of the business plan. So to your original question, is local investing impact investing? And so I'd have to start out by saying the term impact investing probably hasn't reached a critical mass of being well defined in the culture. But I think the shorthand most people would agree on is that it's either an investment that is in the environmental space, or it's in the social impact space, which would be things like alleviating poverty, or access to food, water, or access to finance in areas that don't have financial systems.
So it sounds like we're cutting edge when it comes to impact investing here at HaneyBiz. Because I would argue that this is a little bit like modern day barn raising, right? So in the olden days, somebody rolls into town and they're a blacksmith, and we don't have a blacksmith in our town. Well, let's help them set up their shop and help build them a barn. And now we have a blacksmith, and really that economic development coming from having a more full-service town is great for the entire economy of the region. And I think as we think about Sacramento specifically, we were hundreds of years ago, we were the gold rush town, and then we became a railroad town, and then we became sort of a government town. We've become pretty reliant on the government and for jobs and economic sustainability. And I think many of the people, being somebody who grew up here, many of my friends, when we got out of high school, it was like, what do you want to be? What are you going to go do? A few went off to college, but many said, well, a good job is one with great benefits, and they've got that at the railroad, they've got that over at the Sac Army Depot, or they've got that at the estate job. And that was really what people kind of dreamt about doing a little bit. And so, and I think our town probably has embraced that philosophy from, let's call it from the 50s or the 60s on. And so now being right down the street from, I'd say one of the things that might be called the entrepreneurial epicenter of the world in the Silicon Valley and San Francisco. And here it's sort of seemingly has bypassed us. But if enough people commit to changing that maybe we can ignite an entrepreneurial revolution, and that way we are making an impact.
Yeah. I think, so to go back to the impact definition, I think there's I think we just have to accept that there's a sort of a proper noun definition out there that's around environment and social issues, but I'm not saying that to detract from the impact of investing locally too. I think it's just it's a field that's not as well defined. But when I think about what it is we're doing here and what the impacts are, they're pretty clear, right? So if you think 2 out of 3 jobs are created by small businesses, I think this investment thesis of keeping your investment dollars local, and then what you're doing with the community platform, kind of bringing you're bringing capital off the bench, right? And getting it in the game. And there's a tremendous, I think, multiplier effect over time that occurs there, right? This capital that could have gone into the stock market, or to some, far-flung investment stays here. It grows businesses for these entrepreneurs, that creates jobs. It just, it has a tremendous effect on concentrating wealth. And a rising tide lifts all boats. So I'm completely bought in. I'm drinking.
Well, it
the
does
Kool-Aid.
make for a good podcast if we argue a little bit. So I wanted to make sure I tried to stir it up a little bit, so there is a little sparring just for sport here. But put your money where your town is. Why put your money into something that's out of state or out of the region when you're raising a family here? We're, some people are thinking about leaving our community, and that's fine. But those of us that are staying, and there's a lot of us that are staying, and there are a lot of people that are moving here because it's a great place to raise a family, and there's other great things about the Sacramento region. But those of us that are staying, we should consider putting our money where our town is, and I think that's kind of the concept. And I hope we're bringing a few people off the bench, off the sidelines, and getting in the game. And that's what part of what you're doing here at HaneyBiz is not just running this, managing the pipeline and managing the portfolio. Some of the things that we've talked about have been how to pull this capital off of the sidelines. I mean, thoughts on that?
One of the things that I hadn't considered before really getting to know what was going on here is there this just really pragmatic advantage of investing locally. Whereas in the past, I'd looked at deals generally across the U.S., but sometimes across the globe. And it's just a lot harder to do. If you really just focus on a geography that's local, and you make it your mission to get to know all of the technology and progress and entrepreneurship going on there, Sacramento, the depth of the well, it's really deep. And from a pragmatic standpoint, it's much easier to go out and do that due diligence in a car than it is to go to the airport and get on a plane and be gone for 3 days. So as I think about one of the advantages, I mean, it's, in finance parlance, I think there's alpha in not spending time on the plane and wasting time traveling when you've got a ripe set of opportunities here. And, follow up, just Sacramento specific, what you said about being close to the Bay Area, I think it's another amazing opportunity. The Bay Area has had such a tremendous inflow of venture capital for the past, 50 years. It has, it's done a lot of things. It's driven prices up, and there's kind of a migration out of the Bay Area now too. And Sacramento is just such an easy landing pad for sort of the tech refugees of the Bay Area. So as an investor, I see that as a critical advantage. Just a lot of talent coming here, great educational institutions. And I think what we're doing here in this building a place for those things to gravitate to. So both the entrepreneurs, the talent, and the capital all coming together in one place, it makes for a ripe opportunity.
You think about the term synergy. I hear of people that go through accelerators and they go through their cohorts. So they're going through this sort of training, and there's bonding in the early stages of entrepreneurship, right? We know that they're not going through so it's like you have friends that are in that same journey with you, and then you all dissipate and you go all over the country and you build your businesses separately. And I think at HaneyBiz, and with what we're trying to do here with the geographic focus on Sacramento, is, really picture the 100 millionaire business partners in the backyard, all loving one another, all wanting to help one another, all at different places in their journey. They didn't necessarily start on the same day. So you may have somebody who's up at 100 million. We've got some of our portfolio companies that are doing 60 million or 100 million, and then others that are pre-revenue. So we can be inspired by those that have sort of made it to that next level or the next few levels, and those people helping one another. I've already seen it; it's invaluable. So thinking about this, so there's people that are probably wondering, okay, so I want to know how to get involved, and I always tell people, if you're an entrepreneur out there, or if you're an angel investor and you want to talk about where you're at in the journey, you want a sounding board, come to Hanging with Haney, come meet me. I want to meet all of you. Maybe there's a way that I could help. And you're part of that, especially when it comes to people that are thinking about raising money. So you've helped us create some processes because there's a lot of people coming into my world and they need to go somewhere. And when they want money, and they want to take a look at HaneyBiz as potentially a partner, you've created some processes.
Yeah. One of the things that we did early on to sort of control the pipeline of deal flow, on the HaneyBiz website, there's an application where companies can fill out a profile. And I've been asked before, why would I want to do that? Why can't you just look at my pitch deck? Reasonable question, right? So, taking time from entrepreneurs.
Are you too good to just have a meeting with me? Come on, you don't have an extra hour?
My response to that is, when I do take that hour and I talk to an entrepreneur, I want to come to that meeting with all the basics in hand already answered, so we can take the conversation to the next level. That's, I think, the power of when building a curated pipeline of investments, to having everybody come through the same door. It allows, us, when we're reviewing deals, to have a common basis for comparing company to company to company. And there's some questions on there that, aren't maybe top of mind for an entrepreneur when they're pitching, right? How many employees do you have? That might not come up in the 5-minute elevator pitch. But it's one of those data points I just like to have in my pocket, because it helps characterize the company, and I know a lot more about where they are without them saying it.
When I see employees, especially in an early stage company, I sometimes think burn rate, right? So how,
Right.
When you see a company and they've got 5 employees, what kinds of things trigger in your mind as an investor?
Oh, it's immediately, what are the assumptions about salary, and, multiply by, number of investors. And then if I'm thinking that way, I'm probably asking how much cash in the bank, how's your raise going? And,
right.
And really that first number is that you want to get to is how many more months can they operate from today before they need to raise capital or they need to shut down. It's probably the most critical risk question that I think an investor, as they step up to a company, wants to get out of the way.
Right, because the last thing that I think any of us want to do is raise money, hire some employees, and then you have to let them go, or you've got to have major cutbacks that are demoralizing in some way. And, these things are disruptive. And I think that those are the times when people quit, right? So I always say, why do these businesses go out of business? Well, they end up quitting. And one of the reasons they quit is because the stress and strain of going back into your garage and it becoming just an idea again and getting rid of your team is so demoralizing. You sort of want to quit at that point. And then that's when you start seeing people going, well, it's just not worth it anymore. And so I always look for people who have, you try to assess this, people who won't quit, right? They have the kind of the no quit attitude. And I think being a little bit conservative on the hiring sometimes can be, pragmatic, to use your term, but also you're gonna grow a little slower if you're slower to hire. So, so a question for you: so you're looking at a company and you see that they've got a certain amount of runway until they run out of money. When you're advising a company, what kinds of time frames are you looking at before the next raise, before they've got to get to profitability and so on? Is there a way to think about that if you put your advisory hat on?
Yeah, I think there are. I want to caveat that with saying, any advice you hear like this from someone as you're trying to raise your own capital or start your own company, always take it with a grain of salt, right? Like, there's no way to make one model fit all. But I think, to give you a straightforward answer, when raising capital, I think the market expects companies to raise, and this is back to the rocket ships, not necessarily the grocery store, 18 to 24 months of capital. And that's, a pro forma number based on expected hiring over that time. And then at that point, a company on that journey, which is the venture capital A, B, C, D, et cetera journey, it isn't necessarily expected that the company will be profitable at that point, but maybe coming back to the market for additional capital. So that said, the caveat is, if you're not building the Silicon Valley software as a service company, maybe that doesn't make sense, right? Maybe you have a more capitally intense company. You're, companies I was looking at building chemicals or materials industry. You don't need 24 months of capital. You might need 36 to 48 because you are not going to have product ready to go sell. So in that equation of how much capital do you need, I think it's really important to be honest with how much time is it going to take to generate revenue. And, if you're building software and you got an MVP and you need 6 months more to put a couple more features on there, and then you can go to market. 18 months of revenue might be more than you need.
Well, okay, so let's take this to HaneyBiz. So as you're advising me on the build out of the portfolio, and we're sort of doing this together with you as the lead, I get us into trouble. You clean it up and make it pretty, make it valuable, cause everything to work. We're all over the board, right? So you see the grocery store style company, and you see the software company that could be a rocket ship. Some have done pretty well, and you've helped advise me on a few of these. I mean, what are you? How do you round out a portfolio like ours? What's the right mix for me? What do you think? Advise Mark Haney right now. What's my mix? What should it look like? Do I want those chemical companies? It's going to take me, or a medical company? It's going to take 4 years to get the cure to market. That's a long wait.
Yeah, well, so this answer could be a little wonky, but I mean, the great thing about a portfolio like this is I don't think you need to spend too much time worrying about industry weightings. These companies just don't correlate to each other, right? They're all living very independent lives, So this makes me think of portfolio construction on the other end of the spectrum, right? If you're buying a portfolio of stocks, they're all highly correlated to each other. They're all going to go up and go down at the same time to a large extent. Here, you have a maximum amount of diversification. So from a portfolio standpoint, you're taking a good deal of risk off the table. So it's a long-winded way of saying I don't necessarily think you do need to think about industry allocation.
Okay, so I was expecting certain groupings to sort of emerge. Here we are. We've got some direct-to-consumer brands that really have great marketing funnels and things like that. And there's synergies that can be sort of driven between certain types of companies. So it might be service companies in the B2B space. It might be direct-to-consumer companies, and finding ways to sort of leverage the knowledge and maybe some of the relationships. I was kind of assuming that we would see some of that emerge. I don't know, restaurants. Hey, we got these 6 restaurants. Maybe they all get along and share secrets. Do you anticipate any of that?
I do, and I'm not sure how it works itself out. But I think there are broader trends in things that become popular with founders, hot spaces, right? So what do I mean by that? How many crypto-based companies come to market this quarter? How many will come to market 1 year from now or 2 years from now, right? Is that on a steady growth pace, or will some of that fade away? I think crypto technologies in general are here to stay, but will we see, these crypto tourist companies? They don't really have a breakthrough technology, but there's some sort of feature to their product that's crypto based, right? Like maybe they fade away, and maybe the core technologies get larger. So I don't know. I don't know how it all works itself out. If we could tell the future, actually, we wouldn't need to be here.
True. So, but I try to anticipate this as people come in here. So I don't know if, from the angel investor community, I don't know if our listenership really understands the amount of entrepreneurs that we meet, the amount of deal flow that we have, the amount of opportunity that really exists. There's a lot, which brings up sort of the question is saying no, saying not now, saying yes if. I mean, some of these, our styles probably are going to contrast each other to help us find the right decision. Here on my sidewall, it says yes if, which means anything is possible. And yet, we're going to have to say no to more entrepreneurs that want investment than we're going to say yes to. We're going to look at a lot of deals, and really we're going to select the very best. We have to. I mean, that's just right. It's just what makes sense. Or we might have to say yes if, and that might be we look at you again in a year when you've hit certain milestones. I mean, what's your perspective on that?
Well, I think there's a number of perspectives to look at that from. I think it's important for us, to recognize that the balance between the amount of capital available in the region and the amount of startups available here, they're both growing, and I don't know which is going to outgrow which. But in selection, I think it's important that we recognize that you can't always tell the future, right? So we do need to stick to companies where we think we can be the value add investor, right? So I think it's a mistake for early stage entrepreneurs to just take the first check that comes along, if that investor is going to be dead weight. I mean, unless that's what you're looking for. Maybe maybe a founding team has it all together and they don't need they don't think they need strategic value. I think it's probably a mistake. So for us, as we think about selection, we need to look for a good fit between sort of our more intangible offering, besides capital, and where's a good fit? Where can we take a company and add a little bit of juice to help them succeed? I think that's going to make for good investor company fit.
Let's talk about value add for a second, because I know we've sort of talked about that or around that a little bit. Where do you feel like we're best positioned to add value?
I think there's a number of areas, things that we do really well. Companies at early stages, you generally have a founder or a small founding team, and they have to do it all. And when you break apart a business, what are all the responsibilities? Number one, make money on your core product, and that should take up almost all of your time. So are your books spotless, right? Has every receipt been logged?
Yeah, we've got the CPAs on staff.
All,
yeah.
Right. So I think we can provide a lot of value there. But then across the spectrum of the more mundane operational stuff, your network of connections is very deep.
Well, what about your network of connections too? I mean, just yesterday we were on a call talking about two prospective portfolio companies, and one of you've got relationships sort of that broaden out our Rolodex. So anyway, sorry to interrupt you.
No,
but I'm
no
like,
problem.
damn, you're talking about I know a lot of people, but I mean, know people in the biz, right? In the investment community.
Well, yeah, and I'm hoping that's one of the things we can, bring to the table and force in the coming, in the near term, really, is, a company that maybe you've invested in a year ago, they come back to market later, that maybe in a year need more capital. I think we want to have a playbook to help them get to the larger institutional investors. So, many of them are in the Bay Areas, but bridging that gap and getting them in front of the investors that can write the 7-figure check or the $10 million check. There's a big gap between the angel fundraising round and then the institutional fundraising round. And there's a lot you have to be prepared for. There's a lot of, the due diligence gets much harder. So I'm hoping that within our portfolio, we can give those companies an advantage. And it's a really boring conversation to talk about, how clean are your board minutes, or how's the governance structure? Do you have proper controls in place? But if you do that before you go try to get that Series A from an institutional fund, you have a big advantage, because at the end of the day, the Series A check writers, they're just people too, and you want to make their job easy. And so presenting them with a clean company just gets them to yes so much faster. They don't have to look at your financial statements and say, this thing's a mess. I don't understand what's going on here. So I think it's underrated, the power of a clean due diligence package being delivered to institutional investors. So I'm hoping that's one of the things that I want to work on here and assist our portfolio companies with, as they think about how they grow to the next phase.
And you think about that too. So when you are at the VC level, even at the angel level that we're at, the pre-seed or whatever we want to call this, I mean, the cap table. Can we explain to everybody what the cap table is and maybe some of the horror stories that you might see that we have to avoid? So sometimes they have all these side deals happening and who owns what. And, sometimes this gets a little bit dirty and it can scare away the VC.
Yeah,
or the angel.
I think that's right, because the investor coming into a company, there's nothing scarier than getting to the end of the due diligence, loving the idea, loving the founding team, and thinking everything here is going to click. And then you take a look at the cap table and realize, well, if I put money in here, I actually don't know what I own. Because particularly at the professional level, that has to be very clearly defined. I gave you X dollars, I own Y%, or I own, Y percentage of the notes outstanding. Whatever it is, should have very clean lines around it. So I've definitely seen companies that have everything together, and then you get to the cap table and, there's a name on there, and you talk to the CEO and they say, well, we had a handshake deal and I think it's going to be 5%, but it might be 7%. So that's why I just wrote in 5% with a note on the Excel sheet. And that it's a pain to get it all cleaned up. But it's absolutely critical for the next investor coming in to not have any doubt about what they're buying.
It isn't it where you see usually at that friends or family round, they're just getting the idea off the ground. They haven't gone to someone like you or me yet. They haven't been hanging with Haney yet, or they haven't got put together with somebody that really can sort of advise them on these things. And then they just start making decisions, which you got to make decisions in the early stages. Right. So you hate to fault somebody for just rocking and rolling. You want to take money, but boy, doing it correctly is right. So important. And people don't know that.
And I think people get scared about the cleanup too, right? I think a lot of people know they have problems.
They don't want to face it.
Don't want to face it. Yeah, it's easier to just sweep it under the rug and say we'll get to it later. But that's again, it's about having the right peer group or the right mentor group. Generally, those problems are pretty easy to clean up. You're almost certainly going to write a check to a lawyer. That's just going to be part of the process. But they're generally speaking not that painful.
You'd rather do it early, though. You'd rather do it or the earlier you face one of those problems, the better negotiating position you might be in with the with your investor, right? Because the company is less valuable now. When you're out there on the doorstep of a Series A, you've lost all your all your negotiating power.
Absolutely. There's I spent a lot of time as a risk manager for a public equity portfolio, and there's a concept in risk management that time and volatility and risk are all the same concept. Time equals risk, and when you let something like your cap table management problem fester, the risk just builds, and it just every day is riskier than the last. On problems that generally can be fixed pretty easily.
All right. Well, we only have this has been a fun conversation. I want to make sure we do this more often because I think it can be sort of down to earth and educational simultaneously for our audience, and really mix in a little bit of how to work with us and give them also some practical things to think about, even if HaneyBiz isn't the answer for them. So thinking about that, so we have Mark Tank, we have Hanging with Haney, we have Entrepreneurs Unleashed, and I think the Entrepreneurs Unleashed that's coming up is, I think it's in January, and we're going to be talking about how to value your company. And we didn't have a chance to really get into that, but maybe you can could you give us a sneak peek? So I'm going to be sort of moderating this panel with you and a couple of other VC guys, one private equity guy, and we're going to be talking about how to value your company. And maybe when we talk about the earlier stage companies, how to value that pre-revenue or, an unprofitable company. What are the things, can you give a little hint at how you're going to answer some of those questions and why somebody might want to show up that day to get the full scoop?
Yeah,
tease
sure.
a little bit for us?
Yeah, I can tease it, and I'll lead it off by saying, it's something I've been thinking about for years and years, and it's one of those topics that I'm looking forward to the conversation and hearing other perspectives on, because it is, people think of finance and they think it's dry and mathematical and precise, and valuation is where we set all that aside and we look into our crystal ball and try to tell the future. And there's some generally accepted best practices for it. But a lot of it's in the art of the storytelling.
Yeah.
And the value's in the eye of the beholder. So you can get consensus around some numbers, but you make a lot of money when you see something that's worth a lot more and nobody else sees it.
A good enough story can create that FOMO, right? That fear of missing out, and people will pay where maybe industry standard might say, "Hey, value the thing at $3 million or $4 million." If you can get $8 million, you can save some of that liquidity, or save some of that room on the cap table. So,
and hopefully it's worth 80.
Yeah, exactly, for sure. And we're seeing some of that happen in our portfolio. So we'll bring up some examples of that if you come out to Entrepreneurs Unleashed. It's in January, so it's after the holidays. But we'll keep you abreast. Hit me up at HaneyBiz.com or at the Mark Haney if you want to reach out to me on social media. I mean, how do you want people to get a hold of you? You want them to go through me and through Hanging with Haney, and then let me filter them to you as needed versus getting bombarded? Because your time, I mean, you've come in and you're drinking through the fire hose because I've got us into so many situations.
No, I think that's right. Come through those channels. We're also looking at the forum on the website, which is open right now for people who are in their capital raising process. And we're thinking about how that can change over time, and maybe coming soon, an iteration where it's not just people seeking capital, but, anyone who wants to be closer to the community might come through that same channel.
Okay.
That's a work in progress.
Uh-huh.
But I think in the coming days, that'll be a great way for people to, formally reach out and guarantee that that we can make some sort of interaction between them and the community happen.
Ian DeWeerdt, my new portfolio manager. Yes, my friends, I have arrived. Thanks, Ian, for sharing the mic with me today. I look forward to doing this a lot more in the future.
Same here. Thank you, Mark.
You betcha. Thanks for watching today's show. My goal for every episode is that you find a takeaway, something tangible you can use in your business today. And if you have a comment about a favorite takeaway, feel free to put it in the box below. And if you have a topic that you'd like me to bring up on the show, don't forget to let me know. And also, don't forget to subscribe to our YouTube channel if you want to learn more about entrepreneurship. Because at HaneyBiz, we are always by your side.